Hello traders, welcome back to class as we proceed in our forex trading course. In previous class, I made us to understand the types of analysis that we have in trading. If you want to trade forex market, you want to trade the crypto market, the stock index, synthetic index, or whatsoever aspect of trading you may want to venture into, I told us the different types of analysis that can be carried out as an individual investor, where I talked about technical analysis, fundamental, sentimental, and the rest of the type of analysis we have. So in today's class, we'll be looking at some concepts we need to understand when it comes to technical analysis. Because as an individual investor, what we tend to do most is using technical analysis. And the concept we are going to learn in today's class is what we call the candlestick. Understanding candlestick, the language of the market. You that are completely new into trading, of course, you do not know what candlesticks are, what they meant, and how to read them. But I'm very sure that you are familiar to the forex charts, where you see some series of red and greens or blue and black that are just moving up and down, but you do not understand what you are seeing on that screen. What you are seeing are what we call the candlesticks. This is the language of the market, and if you do not understand the language, you cannot interpret what it is saying. So in today's class, I'm going to be explaining to us the candlesticks that we have and how to properly read them to make decision in trading. So let's learn. So welcome to the world of technical analysis. This guide will help you and accelerate your knowledge in identifying and understanding the various candlestick pattern we have. This candlestick help us in making decision whether to buy or sell any particular assets. So let's get to learn. Follow me as I show you what you need to understand when it comes to candlestick. So the question is, what are candlesticks? What are candlesticks? Candlestick, just as I've said, they are the language of the markets, and these are formed using the open, high, low, and close of a chosen time frame. Do not forget that we have two types of traders in the markets: the buyers, which are also called the bulls, and we also have the sellers that we call the bears. I hope you remember the term when we talked about terminologies. So when the market is going up, we call it bullish, and when the market is coming down, we call it bearish. So therefore, we will be identifying our candlestick for bullish, which is buy, and bearish, that is sell. There are single candlestick, there are double candlestick, and in fact we have triple candlestick. Don't get scared. Let's dive into it. So first thing we want to understand is to understand the components that make up a candlestick. So what you are seeing here, we have on this side we have a bullish candle, and this one we have a bearish candlestick. Just think it as if we have a male and a female. For a male, we will have a characteristics that will make us to understand that a particular person is a male. And also, for us to call someone a female, we need to see some characteristics. So same thing is applicable when talking about candlestick. Bullish candlestick has what it entails, and bearish candlestick also has where it entails. So when talking about bullish candlestick, when we say bullish, we are expecting that the market is going up. So this means that if price is going up, we are starting at a point before we actually moved up. So if we want to go up, of course our starting point has to be at the bottom. So that is why we can see this candlestick, we have the open at the bottom. Look at this component once again. These are what a candlestick comprises: open, close, high, and low. Both bullish candlestick and bearish candlestick has this, but where they have it is different. Let's explain further. Bullish candlestick, because we expect that the market want to push higher, the starting point for this has to be at a bottom. So we have the candlestick to close, to open rather, at this bottom. Then we push higher and close at the top. So we have the open and we have the close. We have a high and we have low. This, when we have high, you can see we have something like a line at the top and we have a line at the bottom. This line are what we call shadow, or we call it wick. Shadow or wick, W-I-C-K, wick. So when we have it at the bottom, we call it a lower wick. When we have it at the top, we call it an upper wick. The highest point where this wick is what we call the high. The lowest point where we have the wick is called the low. This means that this candlestick helps us to understand a transaction that happens between the buyers and the seller for a specific time period. And during this period, the bullish candlestick here tells us that this is the open price. When the market opens, this is the price that it opens. And reason why we have this lower wick is that price dropped down as a result of pressure from the sellers. But we have price pushing back up. That is, buyers start to gain some strength. So because price push up, that is why we leave a trail, and that is called the wick. Then the buyers take it further up to this high. When it gets to this high, price drop down. Seeing pressure from the sellers, price drop down. So what you want to see in a bullish candlestick is that we are going to open at the bottom, close at the top, and we have the wick at the top, we have a wick at the bottom. But there are some times whereby some candlestick will not have this. They will not have an high and they will not have a low. I'm talking about the wick of this candlestick. In a case whereby we do not have the wick, that means we are going to have the low at also the open price. We will also have the low at the open price. If a candlestick do not have a wick at the bottom or wick at the top, that means both the high and the low of this candlestick will also be the open points and the close points. The open points and the close points. Don't worry, I know this is kind of difficult first. I'm going to explain it further for you in a way you are going to understand properly. I'm as well going to show you examples on the live charts so you can understand the candlestick. Then we have the bearish candle. The bearish candlestick is dropping down. That means that the market is in a state of selling. And when something is dropping downward, it means we need to have a starting point. And that starting point has to be from the top, because now we are dropping downward. So we start from the top and then we drop down. That says that the open of a bearish candlestick will be at the top and the close will be at the bottom. Now you can see the difference between the bullish candle and the bearish candle. The open of a bullish candlestick is from the bottom. Why? Because we actually want to push higher. The open of a bearish candlestick is at the top. Why? Because we want to push lower. So the only difference between the bullish and the bearish candlestick is their open and the close. But the high and low are the same thing. Now the difference, or let me say the distance between the open and the close is what will determine the body size. This shaded part that we shade in red, this shaded part that is shaded in green. If the open and close are not too far, then it means the body size of this candlestick will be small. If the distance between the open and the close are very long, it means the body size of this candlestick will be long. So when we get to some other differences that we have when it comes to candlestick, we are going to see some that are smaller in size and we will see some that are bigger in size. Let's continue our learning. I hope you understand this now. If not, don't worry, I'm still going to show us practical examples. Now, when we want to trade, we have different types of bullish candlestick. Just as I've said that we should take this as a male and this as a female. You know, even when we have a male, there are different types. We have someone that is dark in complexion, someone that is fair in complexion, we have someone that is short, we have a taller person, we have someone that is fat, we have someone that is lanky. Same thing when it comes to bullish candlestick or bearish candlestick. We have different types of candlestick under the bullish, and we have different types of candlestick under the bearish. This one only helps us to know what comprises a bearish candlestick and what comprises a bullish candlestick. So what we now have here are different candlestick and their names. Different candlestick and their name under bullish. All of these candlestick tells us to take a buy trade. All of this candlestick tells us to take a buy trade because they are telling us that buyers are in the market. It is a language that the market tells us. So when we understand them, we know that it is time for us to take action. So the first one here, we have the bullish engulfing candle. We call this candlestick bullish engulf. The bullish candlestick on this representation are in green color. So bullish engulfing means that the bullish candlestick is bigger in size than the previous candlestick. That is why we call it the bullish engulfing candlestick. This shows us that there is more presence of buyers in the market. So when we see this, we use this to take a buy trade. And then we have another candlestick, we call it the bullish Marubozu candlestick. You can see the candlestick. is a long candlestick with no upper wick and no lower wick. It tells us that there is a complete dominance from the buyers. And we also have a candlestick we call the hammer. The hammer has a long lower wick, just as we are seeing here, but a shaving head. This candlestick makes us to understand that buyers are more active in this market, and that is why we use this candlestick to place a buy trade. We do have a pin bar candlestick. If you notice that the pin bar and the hammer look alike, the only difference is their top. One has a wick at the top and the other does not. The one that has a wick at the top is called the pin bar. It is also telling us that the buyers are active. Why? Because of their long lower wick or their long lower wick. We have this candlestick called the morning star. This is the formation of three candlesticks together. So when we see this, we expect the market to go up. Another candlestick is called the tweezer bottom. Formation of both a bearish candlestick and a bullish candlestick of the same size with a lower wick indicate a buy movement. We have a spiny bottom. This candlestick is usually spot at the bottom of the chart, and we expect it that the buyers should take over when we spot this candlestick. We have another candlestick called piercing line. This also tells us that buyers are active. So these are candlesticks that we have under the bullish candlestick, a bullish arami, meaning that a smaller candlestick. We have the bullish railway, combination of both. You will see the difference between this railway candle and the tweezer. They look alike, yes, but there is difference, so always pay attention. But both are still telling us that we can place a buy trade. The three white soldiers. The three white soldiers comprise of three bullish candlesticks together. So when you have the formation of three candlesticks following each other, that is called the three white soldiers. It makes us understand that there are strong buying movements in the markets. That is why we are able to have three consecutive bullish candlesticks. So all of these candlesticks under the bullish candlestick are what we use to take decision in trading when we want to buy. All these are relating to when we want to buy. Now, if we want to sell, what are the candlesticks we need to see? That are called the bearish candlestick. So for the bearish candlestick, you can see we have the bearish engulfing, meaning that we have a strong bearish candlestick that is longer in size than the previous candlestick. We call it bearish engulfing, bearish maribozo, inverted hammer. We have the hammer for the bullish. When it comes to the bearish, we have the inverted hammer. We have the shooting star. All of these candlesticks are telling us that we can place a sell trade. Evening star, formation of three candlestick. Tweezer top, formation of double candlestick. A spinning top, a dark cloud. We have the bearish arami, bearish railway, and the three black crowds. So these are candlesticks that we use to take sell decision in the markets. And also we have some candlesticks that we call the indecision candlestick. These candlesticks are not reliable. That is why we call them indecision candlestick. We have the first one, which is a dragonfly. If you look at this candlestick well, we have a long lower wick, which indicates that, of course, we can use this candlestick to take a buy trade, but it is not reliable. Why? It has a smaller or tiny body. So we do not rely on this candlestick. When you see this type of candlestick, you are yet to take a decision in the market. You still want to wait to see any of the other bullish candlestick. And also we have the gravestone. The gravestone is telling us an indication for sell, but it is also not reliable. we have the doji. The doji is now telling us that there is no particular side of this market. If you look at the wick at the top and the wick at the bottom, they are of same size and we have a tiny body. There are some times we will have the doji as this with no body at all. This is telling us that neither the buyers or the sellers are active. We have the same numbers of buyers and sellers in the market. So when we see any of these doji categories of candlestick, we are still waiting because these candlesticks are not reliable to take decision. And also I want you to understand that all of these candlestick, we don't base our decision alone on the candlestick. We combine it with other technical factor. So I'm going to explain to you other technical factors that we need to know when trading. So I will see you in the next class.